In this episode, GoldCore CEO Stephen Flood is talking to Max Keiser of RT for his extremely popular show, The Keiser Report. And they're talking about the impact of higher yields on the gold price and the effect of excessive money printing, and whether or not Bitcoin is putting gold in its shadows. Keep an eye out towards the end of this video where Steve discusses the concept of gapping down and why you need to be aware of this market phenomenon. And as ever, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now.
Welcome back to the Keiser Report. Time now to go to Stephen Flood of GoldCore.com. Stephen Flood, welcome.
Hey, Max, great to be here.
So I suppose the biggest news of the past week is the dramatic rise in yields. Your thoughts on this? Will money printing have to accelerate? How will this impact precious metals, Stephen?
The market generally is getting concerned about inflation. I think they're looking at the Fed and the signals coming from the Fed, thinking that they're not taking it as seriously as the market wants them to. And they're getting ahead of that kind of trend. So yields are rising, prices in bonds are falling, people are moving out of that market. And then you look one step ahead and you think, well, does the equity market look expensive in that kind of scenario? There's a thing called the equity risk premium, which is like the percentage that you should get in over bond yields to justify a stock market position. And if yields are rising, that equity risk premium, contracts, and suddenly the equity markets look a little bit toppy. So they're kind of reacting as well to this news on a kind of like a second order basis. Overall, though, what you're seeing is that, inflation is in the offing and people are worried about it. What's going to happen when we come out of COVID and people start spending all that money that they've saved up? What happens to the economy? Does it overheat? Do the powers that be, are they able to keep control of it? Initially, I think what you find is that there's a bit of a sell-off. A lot of things get liquidated. And we've seen that before when events start to take a mind of their own. So, gold and silver tend to sell off with equity markets in initial stages of a potential crisis. And then they tend to, as money rotates out of risk on, which is equities and certain bonds, into risk off, which is cash and safety and metals, then those things should actually start to right themselves and gold and silver will start to rise again. Typically, that's what happens.
Gold trading at an 8-month low looks pretty pokey. What's going on?
It's incredible. I mean, I think what you're seeing is there's a tale of two markets here. There's the paper price of gold, and then there's the actual physical market for gold investment product. And the investment market is made up of the spot market price plus the premiums, and premiums have started to rise. In fact, in silver they've risen quite a bit. In gold they're beginning to rise as well. And I think that's going to happen a lot more as investors turn to physical gold and they look to allocate maybe kilo bars or to buy bullion coins, and you're going to find those things become quite difficult to get your hands on if this sustains. So I mean, we're seeing huge demand for precious metals at the moment across all the markets, and we think that's going to continue.
Of course, the Wall Street Bets crowd and Reddit, they made a splash a couple of weeks ago with their short squeeze on a thinly traded stock, GameStop. And then the momentum kind of shifted over to, hey, let's squeeze silver, because the dynamics are similar. There's a huge overhanging, as you call it, paper silver market, which are primarily short sales to keep the price of silver and gold down from actually having any real price discovery. What if there is a serious squeeze silver campaign out there? Would it have an impact?
Absolutely, yeah, no doubt. I mean, the jury's out in terms of the capacity of the market to be squeezed fully. There's a lot of silver, but it's not in the right place. It's not in the right format for certain vehicles. So the ETF might come under pressure. It may not be able to fill its baskets. You might have its price might decouple from the silver price, and it could become disorderly. But there is we're finding good supply at the refinery level. For 1,000-ounce silver bars in Zurich, we have a fair amount of stock there, and we have a fair amount of a line of sight to the refiners and their stocks as well. It's not quite there yet. But, silver is very much a marginal investment. Most people haven't a clue about it until recently. That is, it wasn't on anyone's radar. I do think, though, that as this inflation story begins to take off, and I think there's a tsunami of inflation coming, and I think people will look to alternates, and silver is definitely going to catch a bid, and you're going to see a lot of people looking to allocate that into their portfolio for the first time ever. And so, this could actually develop into a real full-on silver short squeeze.
A tsunami of money printing. To give some numbers here, 25% increase in money supply just in the past few months, actually. If you look at M1, M2, these numbers and charts are going hyperbolic on the upside. The policymakers in Washington and the op-ed opinion makers in the world's top newspapers tell us that nothing should be worried about here. Why should we be worried?
Keep calm, move along. It's quite frightening what's happening generally and globally, led by the Fed and the ECB in Europe and the Bank of England. Essentially, when they print money in order to prop up these capital markets, namely the equity markets, the bond market, and even junk bond markets, what they're essentially doing is printing money, and they're taxing the savings that people have again. So you're paying tax after tax, and that is, I think that's absolutely criminal. And people don't realize that this is actually devaluing their savings after tax. These people are not elected. They don't have tax raising authority per se, but what they do by virtue of printing money is actually a tax. So you have to kind of, what we use in GoldCore is we talk about personal sovereignty. So having a form of financial instruments that can give you personal sovereignty, that's the role of gold and silver in your portfolio, and it works best when it's diversified. So if you do find yourself in kind of scary territory where things are gapping down, and we all know what happens when a market sells off in a big way, you're not able to sell. It just gaps down, multiple percentages at a time. Gold and silver should rise and take the correction out of that sting, and calm minds, and that's really its proper role. So that's why many of our customers buy precious metals.
I often point out the fact that people malign gold, but it has made new all-time highs in every major currency in the world recently, and has been performing for 10 or 15 years in that capacity. So it does kind of what it's supposed to do. Now, Stan Druckenmiller recently said he's very, very short the dollar due to the increase in the money supply. He owns both gold and Bitcoin. And so this is a play now in the institutional level. Stan Druckenmiller never had a down year since 1981. He's equating gold and Bitcoin, as many other managers are doing now. This, of course, in the gold community is considered heresy by many. Where do you stand?
I've studied Bitcoin for a long time, and I know you're a huge proponent of Bitcoin. And I think that for me, the jury's still out, but I think a lot of people have looked at it as being an alternate to currency. And because it's decentralized, it's not controlled by a government, it gives added protection. And I think there's no doubt about that. But I do think that there's a huge amount of people who are looking at it right now, and they're going into it on the basis of price rise alone, and not for other fundamental reasons, not to use it as a currency. And so I look at Bitcoin as being a great experiment in blockchain technology, which I absolutely believe is transformative for the global economy going forward and for information technology. And if you overlay artificial intelligence onto blockchain technology, you have probably a very deflationary factor in future economies, but you have a huge fundamental benefits as well. So I do understand why people look at gold and blockchain the same way. I do think gold is far superior. It's performed around 10% per annum annualized for the last 20 years. It's outperformed almost every other market out there by a handsome margin. And it's for something that's inanimate and it just sits there and it doesn't actually have a yield in its own right, I think that tells an awful lot about the stewardship of the global economy and the actions of the central bankers.
Of course, we're talking about Bitcoin and not blockchain. Blockchain is just part of the tech stack of Bitcoin. BlackRock recently said their own clients are moving from gold to Bitcoin. They see it as a substitute for gold. And now here's where it gets interesting in the gold mining industry. Franco-Nevada said in their earnings report that the price of gold fell from August because of Bitcoin. So they're citing that in their report at a major gold miner. as being a fundamental issue and something that would go under the category of risk for them as a gold company, because the market sees Bitcoin beyond anyone's individual opinion. The market, Mr. Market, says Bitcoin is equivalent or better than gold as an inflation hedge. As Paul Tudor Jones has said, it's the fastest horse in the race. Is this a public relations problem for the gold mining industry? They don't seem to be able to get their message through.
I can understand it. And if all you know is gold mining and gold production and that's it, and then suddenly this new player on the block comes along and steals your luster, I can understand that reaction. Definitely, gold has lost ground to Bitcoin in the inflation credential area. Absolutely. But Bitcoin is very untested. I mean, it hasn't had any major market cycle really yet. Hasn't been tested. It's not widely known, widely used. It has a number of fundamental problems to it that can be replaced by other better versions. I wrote an article recently comparing Bitcoin to the Model T. It was a fantastic technology at the time. It was eventually overtaken by other better, faster rivals. And I do think that the Bitcoin has a story to tell, but I think over time it might find the competition heating up quite a lot as blockchain becomes much more the story than Bitcoin is today. But that being said, gold has an enormous history behind it and has long market cycles of data to support its position. I don't think it's going to go away at all. In fact, I think what Bitcoin has done, it's done gold a favor because it's opened people's eyes to the abuse, the massive market abuse of our monetary systems, and people are looking at alternatives. And so I think that commentary will eventually come around in gold's favor. We're not seeing it on the trading desk here at all. There's an awful lot of demand for gold, and I think people are looking at these price points right now and thinking it's the buy of the century.
I do think that Bitcoin is going to help gold as gold becomes something of the poor man's Bitcoin. There have been hundreds of attempts to knock Bitcoin off from the lead, and they've all failed. That's why it's worth $1 trillion, and looks like it's going to head to $10 trillion. But nevertheless, gold is still a go-to asset. I don't believe that gold's going to be completely demonetized, as some people believe. But you do have to be in business over there. How do you market gold to the millennial generation right now that seems to be all in on Bitcoin and look at gold like that Model T that you just described?
Well, they're not actually all in on Bitcoin. They're very much all in on stocks, and they're in on tech stocks. And a lot of people look at tech stocks and Bitcoin as being very much in the same vicinity. So I do think that I was talking to a millennial the other day, and he was showing me his phone, and he was showing me these stocks, and they were going up 20, 30% a day, and he was up a lot. And he loves talking about stocks, but he's never seen a full market cycle. And I explained to him, I said, have you ever heard of the concept of a gap down? And he hadn't, and I was like, okay, well, this is what happens. You go to bed at night, your portfolio's at 100. You wake up in the morning, it's at 2, and that is the price. And that's what happened. Essentially in the Nasdaq stock market bubble, where there's a huge amount of euphoria for metals for stocks. So I do think Bitcoin is catching a bid. Bitcoin is also catching a bid from the money printing. You talked about the M1, M2. That's a huge driver for it. Also, there's a malaise. People are bored. They're at home. They're not doing anything. They're on their phones. They're looking at stuff. So you have a fad thing going on there too. But I do think the big story is it's an alternate currency. It's decentralized. It's a fantastic example of blockchain. And I do think you're going to find better blockchains versions coming out. That's just my own view. And I know you're very passionate about it. But I'd actually start looking east, and I would look at the Chinese government, and I'd look at the Chinese central bank, and I wonder if they're going to come out with a cryptocurrency that's globally defined, based on gold, based on other special drawing rights and other basket currencies, and make a play for that reserve currency status as a dollar is weak. And I do think that's actually probably the big story that's going to come out in the next 2 to 3 years.
Stephen Flood of our friends over there at GoldCore.com, the Bitcoin gold story. Much more to come. We can discuss this, I'm sure, in the future a few times. Stephen, thanks for being on Keiser Report.
Thank you so much. Great to be here.
And that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Stephen Flood of GoldCore.com. Until next time, bye, y'all.
Thanks for watching. And if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you enjoyed this video, check out this interview that I did with legendary investor and adventure capitalist Jim Rogers. where Jim issues a warning about the effects of excessive money printing and the effect that it's having on asset price inflation. Go watch that video next.